All right. Hola, guys. How's everyone doing? Good morning. This is Hala Pablo. Thank you for tuning in. Bitcoin. Let's look at Bitcoin. What's going on with Bitcoin? We got some demand, right? We got a little bit of support, or so it seems. Got the macro over here on the 4 hour and the 30-minute forensic VSA over here on the right. Nothing has changed. I have the same chart that we've had for a while. We marked down where we distributed from this blood diamond, the similarities of which from 2021's diamond in subcycle B. The diamond was not as clear cut, no pun intended, as the one that we had this year. However, it was still kind of a diamond, this last symmetrical end. Where it ended, we had the micro trend support line, kind of like we have the same micro trend support line today. And the markdown, subsequent markdown, and the markdown from it. And so we've gone off largely, as you know, anyone who's been following this video series, we've gone off the 2021 subcycle B, and it's we could almost for many of the trajectories of the waves, you could superimpose one upon the other, and you could trace over it. So close they were in mimicking the price action. So we're not going to go back over that. We're not going to labor over that. If you want to, you can go back and look at the old videos as we traced it since December. What we want to do now is focus on the distribution. Now in 2021, we had the markdown. And since this schematic has not given us any reason to distrust it yet, I consider it still valid. Always consider something still valid unless you have a very good reason to invalidate. And an invalidation would be right now demand coming in and putting up another leg, breaking through the ice and coming back up to as it were, re-enter this area underneath where we marked down from the microtrend support line. So if we were to do like an inverse head and shoulders or something from here and have extreme volume coming back up through this ice channel, back up through this top trading range resistance, busting through it and then endeavoring to penetrate this microtrend support, then yeah, I would say that this schematic here would be invalidated. But we haven't seen that yet. We're falling down just like this. We're marking down. Now, when this thing bled out, let's see, we'll go off this low here and then the zenith of this diamond. And you can see where we reconsolidated. We had a reconsolidation zone. This was roughly between the 1618, which was 50 grand back in the day. It's about 4 years ago. And the 2, which is 45,000, 45.5. So that's where we found this. That's where it found support. That's where demand re-entered, and we started a new consolidation range. We didn't know at the time if it was going to be a accumulation or redistribution. Of course, in retrospect, now we could look and see that it did redistribute. A sign that it redistributed, even if you didn't know it was going to redistribute, is you just track the ice throughout it. Remember, we anchored the ice to the PS, the primary support. This is where the support came in, the new support, and we just track it through. You see how the ice serves as like a 0.5 Fibonacci or like a range midpoint throughout. It's because it's the volume weighted average price. So it's the average between the high and the low of the volume weighted by the price, or rather the price weighted by the volume. And so in the latter half of this range, we saw that the price came down after it failed to rally past the resistance points of this trend. It came back down, and we had building supply as it ducked underneath the ice. That was a sign that this thing was going to keep going. So that's kind of like a benchmark. That's the purpose of the anchored VWAP. Why anchor the VWAP to these things? Because at key junctures, whether the price goes above it or below it, we look at the volume. That's why volume is crucial. Traders who don't trade with the volume are really cutting themselves short, and they really they're missing out on such a powerful resource when they use it, when they take advantage of the synergy that volume presents along with the price action. So now remember, in 2021B, it retraced between the 618 and the 2 Fibonacci. And so we could do it here in today's. We go off the low of the diamond in the zenith. Remember, we're drawing the fib retracements, and then we see that the 618 puts it at 76.8. That's this reaccumulation cluster right here. That's 76,000. We're not quite there yet. You see, we're still up here in this free fall area. And the 2 would put us right underneath this, you can't really see it, but right underneath this trading range support line here. The support line, of course, it was the old resistance for the for this long, tedious reconsolidation range that we had starting in March of last year, 2024, and that. Remember this thing? It's just bouncing up and down, trending. It seemed like forever, and then we had the Trump pump, and it went through the ice. I mean, it fell through. It was really beneath the ice for most of the range here, and then came back up through the creek. It jumped the creek with demand volume here, and so that's how you knew this thing was marking up, because for the longest time we didn't have a volume spike of demand of this magnitude, and then suddenly we're jumping the anchored VWAP, and then in the vertical bar volume, this larger than normal predominating demand spike suddenly registers. It's usually a good indication that the asset's beginning to mark up, and it's probably a good idea to jump in. And so, and then of course, the rest is history. How this thing just pumped up from this area where it jumped the creek, about 64 G's, jumped the creek and went all the way up to 109 grand. And so that's all good and all, but now we need to know what's going on what pertains to us today, right? And so we see that we've had this distribution and we're headed towards it. Looks like the price action has its guns poised on the 76.7 area, the 618 Fibonacci, right? The 1.618 golden Fibonacci retracement. That's usually price. The prices will go up if it's an extension, or come down if it's a retracement, and it will mitigate or remitigate those levels. We see that over and over and over and over again. There's no reason why it's not going to do it this time. I just assume it is, especially if we're not finding substantial support. So as you know, we've distributed from this micro trend support line, and now we've created this channel, if you will, about 3 bounces. Now this is on the 30-minute, 3 bounces on the resistance, trend resistance, and 3 on the support. It's formed a channel, a descending channel, and it looks like the spread or the waves are enlarging or expanding just a bit, and so that would constitute a descending wedge. Descending wedges are bullish eventually. And so we look at the volume spread analysis, and we kind of analyze this channel, aka wedge. And let's see, what do we see? We see that even though it's a falling wedge, it doesn't look like it's quite yet ready to start heading the other way. We know this from so this top here, this first top after the primary support came in on low demand volume, as we saw here. So that's evidence of further redistribution. We had the redistribution. We came through the ice, created a new selling climax, another ascending wedge. Now these are intra wedges within a larger parent channel or wedge going the opposite direction. This is normal. And then we had another top here where we tried to go through the ice. It was rejected, and that was also on low demand volume. You see the other valley here? And so that was kind of like the omen of more further redistribution. We had this A, B, C, came down, and now we had the third bounce where we just bounced, another selling climax. And then we've come up, it's formed a little rising wedge. All these, once they bounce off the support lines, look like they're forming rising wedges, and then they have a squeeze or like a liquidity rate or short squeeze out of the top, which takes it up to the micro trend resistance line. And here's the third resistance bounce. Again, we're up against the ice. We haven't been able to go through the ice. But this time, if you notice, we have demand. Look at this big demand spike. But all this effort produced a failure to rally through the microtrend resistance line. and then promptly we have more supply coming in at that. So it looks like we may be going back down again, at least to retest this trading range now. I'm not talking about trend. We're talking about the trading range. Remember, trading ranges are horizontal lines and trends are diagonal. We may be coming back down to mitigate this trading range. And then depending on what we do at this range support, we could bounce back up, do another attempt at the micro trend resistance line, or go back down and have a fourth bounce on the micro trend support line. In any case, I don't know if you've noticed, but these volume spikes at trend support are beginning to diminish. And like I shared with my group this morning, that usually denotes that the price action is heading towards an area of potential consolidation. So it's I'm not saying it's the bottom, but an area where we could have some flatline reconsolidation effort, which could prove ultimately to be either redistribution or accumulation. We'll just have to do the VSA within the range when that happens. It looks to me, if I had to guess, that this is gunning for the 618 Fibonacci retracement level, which what we talked about, the 76.7, and if it reaches that level, then we could find that could be a local bottom there, or it could be not so much a bottom. I don't want to give you the wrong idea. It could be an area of strong support, where support comes back in. Indeed, the 618 Fibonacci is, like we said, a typical magnetic point that draws price action, whether to the upside, the extension levels, or to the retracement levels, or the downside. In any case, the range that results, the consolidation range, could span between the 618 and the 2. The 2 would bring it right down beneath, remember, that range, the old consolidation range that led up to the Trump pump. So this area here, so upper 60s. So 72, so we have the 2 ending at 69. So 69 Gs, between 76 and 69. Still my levels, still what I'm looking for. But now I'm tracking this channel, and you too should have your eyes on something like this. And monitor the price action, trace the blood as it drips down closer and closer towards the 1618 Fibonacci. I think it's inexorable that we're going there. There's no stopping it. But I may be wrong. Who knows? But right now, I have no reason to doubt that we're not going to hit the 618 Fibonacci retracement level. So I'm still looking at 76, and once we hit 76, we'll see what we do there. We could have a strong bounce, but there's going to be an important moment coming up soon, so we'll keep our eyes peeled. So anyway, if you got anything out of this video, like, subscribe. And better yet, if you'd like to take your trading up another notch, check out our trading group. If you watched this video all the way to the end, that's pretty high speed. I'm impressed by that, and it means you're serious about technical analysis, chart reading, crypto, all that. Check out our group. If you really want to learn how to trade to your full potential, learn price action, volume, trading range, trend lines, VWAP. It's really all you need. Don't waste your time with indicators. All indicators do is they tell you what's already on the chart. They're lagging indicators, even moving averages. They tell you what's already there. Volume and price action, you could build a case for what's going to happen. And what's more important is volume often belies the intentions of the market maker. The market makers are Machiavellian. They try to hide their tracks. They try to fake you out and trap you. Moving averages can't do anything about that. Okay, but volume price action can. And so if you'd like to learn the dark secrets of the market makers and learn the technical analysis equivalent of neuro-linguistic programming, NLP. Some of you will know what NLP is. It's like manipulation tactics and all that, and how to counter them. Anyway, I used to be really into that. I was an interrogator. I was a Russian interrogator in the Army for many years. So this kind of thing, I like patterns. I like playing the cat and mouse thing. I have a knack for that. So I guess that's really benefited me in my trading and reading these charts. So if you'd like to kind of learn what I do and just take trading up another notch, check out our Discord trading group. I keep it extremely affordable, and absolute beginners are welcome. If not, just check out, like, subscribe, and you'll get more technical analysis like this, and I'll do my best to keep you safe. All right, guys, I got to go. Talk to you later. Have a great day. God bless each and every one of you, sincerely. And please be safe in the markets. Nothing I say is financial advice. You should know that by now. All right, guys. Thanks for subscribing. Talk to you soon. Adios. Bye-bye.